Welcome everybody. Hello, we are live. My name is Becky. I will be conducting the webinar this evening. My name is there and my email address is there as well. It's bhayman@youcantrade.com. So if you want to email me, if you have questions about anything that I cover this evening, you can get me at that. There's also the support team. The support team being a team means there are more people in it, so they're normally quicker at responding. So we would normally say direct your questions to them. That's tradictive@youcantrade.com. But of course you are welcome to email me as well. So welcome to today's webinar. I was just looking through the list of names. I recognize a couple, so welcome guys. We're gonna have fun together for the next hour or so. Lots to go through. Obviously the title of the session that we're doing this evening is Why Traditional Trading Plans Don't Work. So in a second, I'm gonna put the disclaimer up because obviously that's an important thing that we need to do. But before I do that, I'm just gonna ask you guys, how many of you have a trade plan? And if you have one, do you use it? So I guess the question is, do you have a trade plan, yes or no? And if you have one, do you use it, yes or no? So I'll put the disclaimer up for you guys to have a read whilst I look through the responses there. Again, obviously, just to say, by the way, I'm not going to read this disclaimer to you, so it would take me too long. So you guys can go to the website, which is www.youcantrade.com, to get the disclosure information. Or, of course, you can watch this recorded and pause it so that you can read it as well. Anyway, whilst you guys read that, I will read you and see where you're at with your trade plan. So not anymore, no, yes, use it somewhat. No, yes, yes. Yes, no, working on it. Uses is inconsistent. Okay, somewhat use it. Okay, brilliant. Thank you guys. Thanks for sharing. I know sometimes people don't want to share things like that, so thank you guys for sharing. So from the gist of what I'm seeing here, some people don't have one at all. Most of you guys that do have one, you don't use it. And yeah, some of you are doing both. That's brilliant. I mean, I would say, just to answer this question very simplistically to start with, one of the main reasons why trading plans don't work is because people don't have them. It's because they don't exist, right? We need to have trade plans in order to get them working in the first place. And it is something that's very common that people don't have them. And if they do, they don't use them. So we'll explore why that is as we go through this evening. Now, just to say, we are part of the You Can Trade sort of educational channel. You Can Trade is a TradeStation group company, so we are Tradictive. We are one of the channels within You Can Trade. And obviously, today's webinar is traditional trading plans and why they don't work. Okay, so the awkward bit, having to introduce yourself. So my name's Becky. I've been in the market since 2013. It was actually August 2013, so it's 7 years. I don't remember exactly the date, the specific day, but call it 7 years on the dot that I've been in the markets. Now I trade Forex, futures, bit of stocks as well, but my main specialty is in trading plans and in back testing. And the main reason for that is because I worked in trading education for a long time. Pretty much as long as I've been trading, I've worked in trading education in various capacities. So in that time, I've met hundreds, if not thousands of traders. And what I noticed very early on is that, and I'm sure you guys are aware of this in the world of trading, all you'd have to do is Google it to find out the answer to this, is that the majority of people that trade don't do very well. And I realized this over the years, that there were loads of people that were learning how to trade and that had a methodology, but that just weren't consistently successful. Yet there were some that were consistently successful. So over time I started to go, okay, well, what's the difference? So I went to the group of people that were doing well and said to them, what are you doing? What are you doing that these guys aren't doing? What's the difference? And it wasn't methodology. What was interesting is I thought they would all be trading some sort of golden nugget strategy that maybe they had access to and other people didn't, or they used an indicator that other people didn't have access to, or something like that. And it wasn't that. It wasn't that they traded some sort of magic methodology. They all traded differently to each other. So if it wasn't methodology, what was it? What I started to realize is that when you said to the group of people that were doing well, do you have a trade plan, yes or no? The answer was yes. Do you use it, yes or no? The answer was yes. If you ask them, what do you do? What's in your trade plan? They could tell you exactly what they do. In what scenarios they do certain actions, in other scenarios they do different actions, and they could back it up as well. In terms of, if you said to them, okay, you say it works if you do, I don't know, support and resistance breakout, or you use Fibonacci retracements, or you do moving average crossovers, whatever the methodology was, they could say yes, because 54% of the time I hit 3 to 1. Or yes, because 35% of the time I hit 5 to 1. But whatever the numbers are, they could back it up with statistics that back up that they were successful doing whatever strategy that they're talking about. Meaning they had confidence in what they were doing, they had structure around what they were doing, they knew what they were doing, and there wasn't really any hesitation. For those that didn't do so well, it was, do you have a trade plan? Yeah, kind of. Do you use it? Not really, it changes. What do you do? Well, sometimes I do this and sometimes I do that, and I do use the 60-minute time frame, but sometimes I look at the 30-minute time frame, and sometimes I look at spot forex, but other times I'm looking at forex futures, and just kind of changing variables all the time. They might say things like, I've noticed that when I do XYZ it doesn't work. You say, okay, what percentage of the time does it not work? And they don't know, they can't back it up, there's no statistics. So for me, I started to realize that the structure of having a trade plan and having back tested it and having the data to back it up seemed to be the running theme in the success, or the likelihood of success, of the traders that were around me. So for me, it's something that I then threw myself into, is to learn more about the structure of trading plans, how we can build them, and how we back test them as well. So that's why it's something that I don't shut up about. It's something I talk about all the time, because for me it was huge in my own trading, but also what I noticed for other people as well. Okay, so what we're going to do today, we're going to go through some thoughts as to why trading plans don't really work out a lot of the time, and maybe what might be right or wrong about the ways to do them. I'll obviously go further into that in terms of lecture and explaining the concepts behind these things. I'll show you some applications and examples. Just to make a point on this one, I have to use some examples. Of course, I'm going to have to show you a methodology or glimpses of a methodology in order to prove a point about having a trade plan that uses a methodology. That's not to say that you have to use the methodology. I'm going to show you the same concepts will apply to whatever methodology you want to use, or that you're already using, or whatever technology you already have. So the examples I use are just to help give you the structure of what a trade plan needs to have. And also to make a point here, I have nowhere near enough time to teach you anything about methodology. I can show you again examples of how we put it in structure in a trade plan, but don't worry if you don't understand some of the things I talk about or some of the terminology that I use. Again, it's not the point, as long as you're getting the point behind what I'm trying to say, and the structure that you can take from that, and the point behind it in terms of how you put it into a trade plan. So we're also going to have a gift, so to help you guys be more objective with your trading. It's a gift that I'll give to you at the end. Questions and answers as well, and then a special announcement. So that will be the structure that we have for today. Okay, so in terms of thoughts, starting with that, have you ever wondered why most retail traders don't have a complete trading plan? And then further to that, you ever wonder why most retail traders with a plan tend to ignore it after they've put a lot of work into making it? Now, I would argue a lot of that is because they're not confident with what they've completed. They might have copy and pasted certain things. They change it a lot because they don't really know if it works because they haven't tested it. And most people don't have a plan because they don't really know what to put in it. Again, it comes from lack of confidence, lack of consistency in applying it really and testing it. Now, again, we've all heard that we need to have trading plans, and we've all heard that they need to be simple. But when we get into things, we might learn one way of doing it, and then we read a book and that says something different. So we add that into our trade plan, and then we hear one of our trader buddies say that they do a different thing. So we put that in our trade plan. And then we hear, I don't know, someone that we follow on YouTube, they say something different. So we add that in our trade plan, and we keep adding more and more, and it gets more and more complex and more diverse, and it doesn't really have any structure, which means we're less likely to follow it. Therefore, it's less likely to work. So what I hope to do in this webinar is just show you a different way to approach a trade plan, simplify it without taking out what we need, to give you a structure to put towards your trade plan, which will hopefully impact the way that you trade as well, and hopefully, obviously, for the positive side. Okay, so I'm just going to read to you the Investopedia definition as to what a trading plan is. So a trading plan is a systematic method for identifying and trading securities that takes into consideration a number of variables, including time, risk, and the investor's objectives. A trading plan outlines how a trader will find and execute trades, including under what conditions they will buy and sell securities, how large of a position they will take, how they will manage positions whilst in them, what securities can be traded, and other rules for when and when not to trade. Most trading experts recommend that no capital is risked until a trading plan is made. A trading plan is a researched and written document that guides a trader's decision. Now, for me, the most important thing here is researched. It's not just a bunch of theory that we've picked up from different places that we throw together in a document and expect that to go and work for us. We need to research it. We need to test it. We need to get together some trading samples to prove that the theory that we have, the methodology that we have, the strategy that we have is something that's going to work for us in our environment. Rather than simply copy and pasting what somebody else does and just going forward with it in real time, maybe we take 5, 6, 7 losers in a row and we assume it doesn't work, because we haven't really done the proper research to find out whether or not that is going to work for us. So we do need to put in a little bit of work just to get the data to back up what we're doing there in our trading plans. So should we have a trading plan? Yes, yes, and yes. 1000% yes. Of course, yes is imperative. Yes, of course we do. Trading's a business. As it says there, no business would run properly without a proper plan that dictates the strategy and the company direction. I make this analogy a lot. I know some of you guys would have been in the session with me last month where we talked about literally trading as a business. And it's one of those things that you might hear it a lot, but just to kind of put it into context as to why it is a business, in that normally if something's a hobby, it takes our time and it costs us money. We don't want trading to be a hobby. Now, it can be something that can be passive in terms of the time that we put into it, and that doesn't need to be a Monday to Friday 9 to 5 thing. But it's a business in the sense of it takes our time and money, but we want it to make us a return. That's what businesses do. We invest our time and money in the hope of getting a return. Trading's the same. So if we do it in a business and we invest our time and money to make a return, and we expect that we need a proper plan and structure, we need to apply that same thinking to our trading. I would argue there are 3 main reasons why trade plans don't work. I'll expound on them as we go, but 1 is they're either too complicated, 2, they're undercomplicated or too simple, or 3, they're not applying the business strategy, the business mindset to it. Now, I always make an analogy here when it comes to referring to trading as a business, and I always compare it to a McDonald's franchise. Now, the reason I do that is not because I'm hungry, but because McDonald's is mainly a franchise business. I think 90+% of their restaurants are franchises. And so it makes the point quite nicely in the sense of when we hear McDonald's, we all know what McDonald's is. We all know what to expect from McDonald's. We all have the logo in our heads, and we know what they do, their fast food restaurant chain. However, just because it's one successful company across the world and it has that main model, doesn't mean that a McDonald's in Beijing has the same menu and prices as one in Los Angeles, or one in London, or New York, or Singapore. The different places in the world, the different environment there has changed elements of the business. The franchise owner has to be aware of their environment in order to take that objective model, that sort of main principle model, and change certain elements of it in order to fit their environment, in order to be a little bit more subjective then. If you opened a McDonald's in a mall versus opened it on a business park, again, it might be in the same city, in the same street, but they're going to have slightly different things about them. It might be open at different times of day or have different amounts of staff on. Again, because the environment's different. Now, for us as traders, what a lot of people want to do is they want to take somebody else's trade plan and just copy it and not do any of the work to figure it out for themselves, which would be the same as opening a McDonald's franchise in the town in which you live and just taking a random McDonald's franchise business model or business plan from another random one and expecting to enact it exactly the same and that it'll work out for you. It's unlikely to do as well because you've not taken into account the factors that are personal to you or to your environment. So for us as traders, we need to understand that trading plans are not copy-paste. It's not something we can just take exactly from one person to another or from one, from a book or whatever. We can't just copy it. We can take a core framework. We can take a methodology or a strategy, and we can use that. But we need to mold it to ourselves. Things like the capital availability we have, the time availability we have, the way we think, our risk tolerance, where we are in the world, and therefore what brokers we have access to, and whether or not we can use leverage, or whether or not we can trade things like CFDs, which are available outside of the US but not inside the US. These are all different variables that depend on us as individual human beings, as individual traders, which means we have to mold whatever methodology we use into a way that can be more subjective to us and work for us in our environment, making it more likely that we're actually going to enact the plan and actually do it and actually stick to it, because it's something that actually suits us as individuals, as well as having an objective element in terms of how we apply a methodology. So what a lot of traders do is they do what we call experimental trading. I did this as well for years. I know lots of people that did and continue to do this. Is that people will try one way of trading, goes well, then it goes badly, they try a different way of trading. Somebody else talks about a different time frame, so they try a different time frame. They try that for a bit. Then maybe they, I don't know, there's a big news event and they take a series of losers, and so they change the market they're looking at, they change the strategy, they use a different indicator, they change platforms, they change brokers. And all that means is that they're not being consistent. Now, we know that traders with a plan tend to do well. Traders without a plan tend to have erratic results. Even though most traders have been repeatedly told that they need a trading plan, we found that few traders commit to actually making one or developing one. Most traders procrastinate and fail to put a trading plan together and end up giving up trading before they had the chance to trade in the context of their plan, which means that their results are erratic because their actions are erratic. Changing what they're doing all the time, no structure, no consistency, meaning they've not actually given any strategy or any methodology the time it needs to really prove whether or not it works or it doesn't. So again, that's the element of coming back to, we need to research and test our plans, whatever ones we want to use, whatever methodology we want to use, mold it to ourselves as individuals and test it. Give it the time it needs in order to prove that that plan either works or doesn't before you go at making decisions on whether or not you give up entirely or whether or not you go live and actually risk real money with it. So the two extremes that we found. So even though there are different ways on how to produce a trading plan, most traders tend to fall into one of the two categories. They either have an oversimplified plan, so it's incomplete, or they have an overcomplicated plan. Often includes tons of educational notes. So they'll often have pictures of the picture perfect example of what a trade setup needs to look like. And they'll have pages and pages of explaining to themselves concepts that they know. For example, I've read trade plans before that are like hundreds of pages long that are basically rewriting the manual that they learned and telling themselves what long means and what short means and what trend means and how a moving average works and where Fibonacci came from, which is interesting and great for educational purposes if you want to teach somebody else to trade, or if you want to have your own educational reference point, great. But as an actionable plan, too much. A lot too much. But again, we also don't want to be oversimplified. So I'll give you examples of both. So this oversimplified plan, by the way, this was a real trading plan from a real person. So that's why we've blurred it out. It's obviously personal information on there. But this is an example of what we might call an oversimplified plan. So it's only 4 pages. Now, that's not to say your plan needs to be pages and pages and pages. Again, it's about that balance there, like everything in life, right? It's about finding the balance between the extremes. But this here, obviously being 4 pages, isn't necessarily enough to be telling us what we need to do. Plus, the thing that kind of strikes me about this trade plan is that normally you would expect in some sort of business plan or operations plan that you would see some sort of diagram or flow chart or checklist or table or chart or something that's going to give you sort of do this, do this, do this, like a list of rules. And in this example here, it just looks like paragraphs, again, kind of explaining to themselves concepts, which again is fine, but explaining to themselves concepts over 4 pages isn't necessarily what they need to do. And again, might mean they're not, even though it's a short plan, it might not be very specific as to what they need to be doing. This will be your overcomplicated plan. This is 50 odd pages, I think. I haven't counted, but I think it's quite a few pages. And we can see here that we have multiple, trading, chart examples, loads of them. We've got some form of diagrams in here, but we've also got pages and pages of writing and, pictures and all these kind of things. Again, great from an educational perspective, but not necessarily great to have an actionable plan. It means you have to go through loads of pages before you know what you need to do in a certain situation. Or, you're trying to look for that picture perfect setup, which doesn't really happen in real life very often. Again, leads to an element of subjectivity because you're looking at the picture perfect picture and saying, do what I see on the charts add up with that? Probably not. Whereas if we have just a list of rules that says it has this criteria in there, yes or no, Has this criteria been met? Yes or no? Has this criteria been met? Yes or no? Again, it's a yes or no. It's a black or white. Does it fall within that or does it not? If so, then we can look at anything on a chart and just compare it back to that criteria, rather than trying to find the perfect example where we have these, book examples of the perfect trade setup that we're unlikely to actually find in real life. And then again, pages and pages we've got to go through. It's too complicated and it doesn't actually help us. It takes up a lot of time to make it in the first place, and then a lot of time to refer to it as well. So simplicity is more key than overcomplication. Now, simplicity is important, as the opposite would imply that we have a tedious and lengthy trading process. The more steps we have, the more things we need to go through, the more checkboxes we need to tick or check, the more likely we are to not find trades that fit that, to get frustrated with it and break the rules anyway, to, as it say here, make mistakes, because there's loads of things we have to do. The more processes we put in, the more likely we are to make a mistake. We're human beings. So we don't want to, put odds against us by giving ourselves more opportunity to get it wrong, more opportunities to break the rules. Now, simple is good, but too simple, maybe incomplete. So we need to think about it as if we were writing our trade plan so that other traders could take it and go and enact it. So let's say, for example, if you say, in a trade plan, that this would be an example of it being over simple. Somebody says, I follow the trend. So they give their trade plan to another trader and it says, follow the trend. Great, what does that mean, right? Other traders, we all know what trend means. We have an idea, but every trader is going to interpret that differently. Well, how do you identify the trend? Do you do it with trend lines? Do you do it with moving averages? Do you do it with a piece of technology that lets you know what the trend is? Do you do it visually? Do you do it based on amount of pivots or breakouts? There are loads of different ways that you can identify what the trend is, which means it's too generic. It's not specific enough. We need to be specific, but again, not too specific, not too overcomplicated. Get that balance. So as defined before, a proper trade plan or a proper plan has to describe a systematic method. So each instruction needs to be concrete. We don't want to have gray area there, where if we say things like follow the trend, what does that mean, right? That's a gray area. That's something that can be interpreted differently, even by the same person based on the mood they're in, based on what they watched that morning, based on, if they've had a few losers recently. They might change their definition of that. So again, we need it to be concrete, we need it to be black or white. So here are a few examples. So again, with these examples that I'm going to show you, I'm not necessarily disagreeing with the content. I'm just saying that it's not specific enough. So here we have plan the trade, trade the plan. Great. Yes, we need to plan the trade and trade the plan. That's true. And that's a great quote to potentially have on the wall near where you trade, or maybe in your trading journal, or something that you read every day before you trade, just to remind you to stick to what you need to do. But it's not a trading rule. You can't give that to somebody else and them know what to do with it, right? I'm going to show you a different example here. So at the top there, it says buy at support and sell at resistance. Again, great. I'm not disagreeing that might be something that works for people. But what do you mean by that? How are you defining support and resistance? What timeframes are you using to see it? Where are you drawing your lines? If you find the line and that's your entry, where are your stops and targets going? Again, it needs to be more specific. And again, this example here, start each day mentally and physically prepared. Always follow daily routine. Again, yeah, I agree. You should start each day mentally and physically prepared. That's true of probably everything in life. Always follow your routine. Great. But what is that routine? What's your trade plan? How are you going to sit down and actually trade when you're looking at the charts? And again, these are examples of rules that are more to do with the mindset, or again, just quotes or motivation, but not really to do with your trading rules. Again, I'm going to bring it back to McDonald's here as an example. Let's say a McDonald's franchise is going to have a rule that says that you heat the fries up to a specific temperature. Now, they're not going to say, heat the fries up to the adequate temperature and serve them at what is acceptable. That's way too generic. A person working there can't take that and know what to do with it. At the same time, they're not going to say, heat up the fries to 350 degrees Fahrenheit for this amount of minutes, and this is what fries means, and fries are made of potatoes, and this is how we do it, and these are the laws of thermodynamics, and these are how things heat up. We don't need to know that. That's irrelevant to the point of actually what we need to do. It will just be something that will say, heat the fries up to 350 degrees Fahrenheit or whatever for 2 to 3 minutes, and then take out and leave to stand for 2 minutes. It's specific. It's not general and vague, but it's also not way too overcomplicated. Again, it's that balance between the two. So when it comes to our trading plans, we also need to have an idea of what we're looking to get from it, our goals. Now, this is the fun bit. This is the bit that people like doing, is thinking about all the things they can do with their trading and how much money they want to make. And that's great. Of course, we wouldn't be trading if we didn't have goals, if we didn't have things we want to get from it. But again, we do need to be realistic with it. Think about it like a business. So it's okay for our trading plans to have goals based on expectation calculations out of back-tested or past result data samples. Again, back it up. If you're saying you want to make a certain percentage per year, where is that number coming from? It's not okay to set our goals just based on what we want to accomplish, or a wish, or what we fancy doing, without having documented data that shows us that we can do that. Again, if we opened a McDonald's franchise and said, I want to double my investment in a week, when there was no data anywhere that suggested anybody's ever done that, again, it's unlikely. And if you start a business because you think that's going to be your goal, because that's just the goal you want, like an arbitrary thing you pick out of the air, again, there's not very much structure as to how to achieve that. So again, we need to be realistic, and it's not about necessarily the amount of money. So in this example, this person there has said they want to earn 5,000 euros a week. This person has said an average of $500 a week, net 20% returns on their account per year. This person down here has given weekly, monthly, and yearly amounts that they want to make and the amount of trades that equates to. Now, none of these are necessarily right or wrong, realistic or unrealistic. What you make from trading is very, very personal, very individual. That's going to depend on the capital you have in the account, the percentage risk per trade, how often you trade, what markets you trade, whether or not you use leverage, what the cost of the trade is in terms of the commissions or the spreads, your profitability rate, how often are you right, how often are you wrong, what do you make when you're right, what do you make when you're wrong, how do you manage your risk. All of these things are all the different variables that can go into what you can expect to get out from your trading, and more as well. So you just need to be able to take your methodology, take your strategy, take your plan, test it, prove it, that it works to a certain amount, so that you can say this goal is based on 100 trades worth that would have made that. Or this is based on my simulated trading for the past 6 months that would have made that if it had been live, or whatever. Again, it's based on objective data that you've collected to prove your point, not just sort of something out of the air. And again, it doesn't matter what the number is, but you just have to be able to back it up, so that when you go live, your results are more likely to match what you've already seen happen, which makes you more likely to go through and actually enact your plan, even if you go through the normal ups and downs and roller coaster that sometimes trading the markets can be. If your testing shows you that you can take 6, 7, 8 losers in a row, but still the month is an up month, then in real life, if you go through 6, 7, 8 losers in a row, you're not going to be so worried, rather than if you just randomly go through that experimental trading thing that we were talking about before. Now, the trade plan portion, getting down into the more nuts and bolts of our trade plan, a lot of people lack these things. So we need our trading framework. That's made up of key rules and processes that are static. I'll come back to that in a minute. Trading psychology and mindset, it's so, so important. We go on about this all the time, and there's a reason for it. When I first started trading, I was told that trading is 90% psychology and 10% technique. And I didn't get that. So just teach me how to do it and I'll do it. What's the problem? But really, really is. You can have the best methodology in the world, best technology in the world, best broker in the world, best everything in the world. If you don't sort out what's going on between your ears, you're unlikely to actually do what you need to do to use those tools and to use that methodology in the way that you need to. You're not likely to actually go and do it. The markets require us to be objective and rational, and we're not as human beings. So again, the more we can do to put things in place to manage that about us and to sort of take out the human element, is something that's really, really key. So again, you might have something in your trade plan that tells you how you're going to manage your psychology. Again, I'll come back to examples in a minute. And then your mechanical trading method. These are going to be your specific actions every day. So you're looking at the market and you're comparing it against your trade plan. This is what I have in front of me. What do I need to do? That's going to be your day-to-day, trade by trade, that you're referring back to your trade plan there as to what am I going to be doing? What's the things that I need to be executing? So going further into trading framework here, again, these are things that are static. You know them by heart. You don't need to tell yourself every time you trade or refer back to it every time you trade. So things like your trading style. You know if you're a day trader or a swing trader or an investor. That's something that you would have decided probably before you trade. The timeframes that you use, they are obviously going to be linked to the style of trader that you are. Again, don't change your timeframes about all the time. If you've decided you're a swing trader, stick to the timeframes that make the most sense as a swing trader. If you change timeframes all the time, then you're changing variables all the time. It's inconsistent. So you would have already predefined what timeframes you're going to use, and that's going to be the same every time. The time window that you use when you trade, meaning what time of the day do you sit down to do it? Again, that's dictated by your lifestyle. That's not something you need to tell yourself. That's something you already know. The broker you use, that's going to be consistent. Your risk definitions, meaning what do you risk per trade? Is it a dollar amount? Is it a percentage of your account? How many trades are you going to have open at any one time? Again, these are things that you've set in advance. Something that's pretty much always going to be true. Obviously, you might change brokers every few years or so, or if you start learning a new asset class, you might switch to a different broker, or you might start off as a day trader and over time go into position trading. Whatever, those things will change, and I'm not saying it's going to be static forever. I'm just saying that the majority of the time, these things are going to be as they are, and it's not something you need to remind yourself every day when you trade. It's already there. Trading psychology. So again, these are going to be mindset routines. Now, this isn't to say, by the way, that you have to, I don't know, always have eaten, worked out, meditated, been to therapy, visualized, whatever, all these things before you trade every single time you trade. Otherwise, you'd never trade. Your life would be way too full. But it's more about understanding that the markets do require us to be rational and to be objective. And we're not very rational or objective if we're hungry, or if we're lethargic, I can never say that word properly, or if we're stressed, or if we're tired. And so you might end up putting different routines into your life in general that help you to be a less hungry, less tired, more rational, less stressed person. So it might be things like meditation. It could be that you visualize 10 minutes before you trade each time, and that's something that is done on a daily basis before you trade. Could be that you run, or you go to yoga, or you go to the gym, or you swim, or you go to hypnotherapy, or you go to real therapy or retail therapy, or whatever you want to do. Things that help you to function better as a human, which is good for you in general, not just for a trader. And again, it will be something that, yes, is in your trade plan, but why not apply it to other areas of your life as well? It's a good thing to apply these things in every area that we can. It helps us. If we're healthier and we sleep more and we meditate and we're calmer people, we're much more likely to make good decisions in everything we do, not just our trading. So we come down to the mechanical trading method. So this is going to be our specific objective actions that are going to change each time, because the markets that we're looking at are going to be different each time. So we need to refer it back to our criteria so that we can say, what do we do? Based on what we have in front of us, what do we do? Now, the first thing we should always know before we trade is, if I'm looking at a market, should I be buying? Should I be selling? Or should I do nothing? My trade plan needs to tell me that, trade by trade. Each time that I look at a market and I run it through my criteria, I want to know, should I be buying, should I be selling, or should I avoid it? Second to that is, if I'm going to buy or sell, where are the places I want to do that? Do I want to buy right now at market, or sell right now at market simply because I'm looking at it right now? Or are there prices on the chart that are a bit more objective, that have a bit more probability for me to get in and out at better examples? Now, obviously linked to that is not just where I get in, but where I get out. Where am I getting out for a target? Where am I getting out for a stop loss? Again, I should be answering that question every time. If I'm buying or selling, where am I buying? Where am I selling? Where am I buying to get in, selling to get in, buying to get out, selling to get out? If I'm right or if I'm wrong. Am I going to scale out, or am I going to have one single target? How am I going to manage my trade? What are the possible outcomes, and what do I need to do for each outcome? What do I do before the trade? What am I doing during the trade in terms of management? And what do I do after the trade in terms of reflection and logging and making decisions from what I learned from it? Again, there should be something that is done in a way that's like a checklist or something like that. Now, the flowchart approaches are often used in industry or lots of things because it helps us to kind of do that checklist in a way that's visual, and it kind of makes it. So as it says here, flowchart is a type of diagram that represents a workflow or process. So in this example here, if I just zoom in on it, this is obviously a flowchart about a lamp, not necessarily relevant to trading, but just to make the point. You have something you want to do, you have a problem that you want to fix. Lamp doesn't work. Is it plugged in? No, plug it in. It is plugged in. Okay, check the bulb. Is it burnt out? Yes, great, replace the bulb. No, okay, repair the lamp. So you have an action linked to the outcomes of whatever your problem is, or whatever the thing that you're trying to do. So for us as traders, I have a situation. What's the criteria that it meets? And therefore, what are the necessary actions I need to do to fit them? Let's check where I am on time. Okay, cool. So I will show you our flowchart example. This is the flowchart that we use within Tradictive. Now, again, just to reiterate what I said at the start here, it's an example of a methodology in a flowchart, so I can just show you how the structure of the flowchart will need to be, or the structure of your checklist will need to be. Again, don't worry if you don't understand certain terminology or anything like that. This flowchart would be assuming that whoever's looking at it, whoever's using it, does understand the terminology, does understand the methodology that we're using with it. I'll go through the first bit, so we'll go up to, so I'll do this first bit of it up to about here, to again, just to show you the framework, and then we'll go from there. Now, the first thing we want to do as traders is answer that question, should I be a buyer, seller, or do nothing? So for us, we do that. The very first thing that we do on our flowchart is to analyze the climate. Now, we do that on our common time frame. Don't worry if you don't know what common time frame means. Depending on your style of trader, will define what the common time frame is. Again, those that are using this flowchart would know for them what that common time frame is. For us, we're going to be using our AutoClimate app. We're going to be using technology to help us answer that question. So this step consists of assessing the market climate, which is the current market environment or trend. Are we in an uptrend? Are we in a downtrend? In order to decide whether to trade long or short, or should we avoid trading? That's also a legitimate thing. So here we're going to apply our AutoClimate to the common time frame and check the dot color and its thickness. I'm going to come back to that in a second. So we have possible outcomes. It can either be a confirmed climate up or down. If the dot is thick and it's sapphire or blue, then the market is up, confirmed up market. If it's a thick dot and the color is ruby or red, then it's a confirmed down climate. It's unconfirmed if it's a thin dot, no matter the color. So just to show you here, to give you a little bit of a visual on that, if I can zoom in. So we have a thick blue dot, tells us that we have a confirmed up climate, look to go long. A thick red dot tells us we have a confirmed down climate, look to go short. Or we can have thin dots of either color. So the AutoClimate app is doing a lot of the market analysis for us to give us, in the form of colored dots, what we need to do. Helps us answer that question. Do we look to go long? Do we look to go short? Or do we do nothing? The AutoClimate app tells us that. So that's why it's the first step. Now you'll see here, if I zoom in over here, the first step, confirmed climate. If we don't have a confirmed climate, we don't do anything. We go back and look at a common time frame on another market. If we do have a confirmed climate, then we go to the next step. So in this example here, this is us looking at our AutoClimate. We've got our AutoClimate at the bottom there. Now we have a thick blue dot, so that tells us to go long. Again, very simple. It's thick red, thick blue, or thin of either. That's it. So thick blue tells us we're going to go long, confirmed to the upside. Don't worry about sustainability for now. So answers the question there, time to trade, time to go long. So now that we've answered that question, we can go to the next step of the flowchart. Again, it's answer the first question. Should we be long, short, or do nothing? If you're going to be long or short, then you go down to that next step. So for us, that next step is to continue to stay on that time frame and help us define what our final target is. Now, we define our targets, our entries, our targets, and our stops. All of those numbers, which are question number 2, If we're going to buy or sell, what are the ideal prices to do that at? We get all of those numbers from our AutoUFO app. Now, UFO, just quickly, stands for, so UFO stands for unfilled order. There you go. I know it's kind of written over that, but hopefully you can get what I mean. So unfilled orders basically means where we expect there to be buy orders that could push price up, or sell orders that can push price down. And once again, we're using technology, we're using a tool here to find that on a chart for us and show us where are these good places, where are these ideal buying prices and selling prices based on buy orders and sell orders. So we use our AutoUFO app to help us answer the question of what's the ideal selling price when it comes to our target. That's the next step on the flowchart. Now we know our target, so where are we going to get in? Again, this is the next bit on the flowchart. With this, again, it's telling us using common and edge timeframes, which again, if you know the methodology, you know what that means. This flowchart would be assuming that you know what that means. Now, of course, you can have a little asterisk. You're not just going to have a flowchart as your trade plan. You might have, another page with, maybe a paragraph or a couple of sentences for each of the points of the flowchart to just expand on it if you need it. So to say what your common time frame is, what your edge time frame is. So here it's asking us, do we have a valid entry? Now for us, we define a valid entry by having a UFO on our lower time frame, on our edge time frame, that envelops the EMA price on our higher time frame, on our common time frame. Again, don't worry so much about methodology. It's about understanding that you have to have rules that tell you what a valid entry would be. And for us, a valid entry is using technology that's found orders that envelops an EMA price on a different time frame. So do we find that, yes or no? If we don't find a valid entry that meets our rules, then we wait for new UFOs to form. We don't do anything. We go and look at another market. If we do have a UFO on the edge time frame that envelops the EMA on the common time frame, then we go to the next step. And again, we've just answered question 2 again. Where are we going to get in? What's the ideal buying price? Now we know where we're going to get in, we know where we're going to get out if we're right. What we also want to know is where we're going to get out if we're wrong. So again, we know what time frame we're going to be on for this one, where we're going to get our stop loss from. Once again, we are using AutoUFOs to tell us where those numbers are. Again, answering question number 2, which is where are these ideal buying and selling prices? So again, it's the flowchart. The point of the flowchart is to help us answer those questions. Should I be long or short or do nothing? If I'm long or short, where do I get in? Where do I get out if I'm right? Where do I get out if I'm wrong? And you're going to have your rules that help you do that. For us, we're using AutoClimate to help us answer question number 1. We're using AutoUFOs and EMA figures to help us answer the following questions. And once you've figured out where you're getting in and out, where your stop loss is, then you're going to want to define your risk and your size. If you're trading Forex, how many lots are you using? If you're trading futures, how many contracts do you want to use? So for us, we just use TradingView. It's a free platform, sort of market analysis tool, where we can just tell it what our entry and stop prices are, and it will tell us how many lots we need to use, which in this case is 29 lots that we would use for this trade. So again, we've got question number 1, should we be long or short or do nothing? Question number 2, if we're going to do that, where are we going to do it? What are the numbers associated with it? And again, it doesn't need to be any methodology. If you have one that makes sense to you already and that you're already doing, great. Put it in a structure where you have to answer a question and it has to be a yes or no answer. If there isn't a yes or no answer, then you need to go back and look at how you're going to define what that answer needs to be. Otherwise, you're going to have gray area and you're going to have things that are generic, not specific, meaning that you're going to have situations where you get confused, where you doubt yourself, where you don't know what to do. Therefore, you break the rules because you don't really have them. Therefore, there's no structural consistency to your action. Therefore, there's no consistency to your results. So again, it just needs to be specific, yes or no. Do this, then do this, then do this. If at any point a checklist or checkbox isn't checked, go back, do something different. So I hope you guys are with me on that. Okay, so quick special announcement, and then I'll show you guys your gift. The gift basically is to help you be more objective with answering that question number 1. So special announcement just to say, to explain for the moment. So we are the Tradictive channel. The flowchart that I just went through is what we use, the methodology that we use within the Tradictive channel of You Can Trade. Now, Tradictive is a place where traders and investors develop their skills using quality education paired with powerful coaching enhanced by the use of innovative I always struggle with that word, and easy to use trading technology that helps mitigate the challenges attached to today's busy lives, as well as the impact of trading emotions. Now, I know for a lot of people that's just words, it might not mean anything. I'm just going to highlight to me what the most important things are. Coaching, that's to help us learn a methodology if we don't have one already, or improve on a methodology if we do have one but we're not sure on it. Easy to use trading technology that helps us to be objective, helps us to be more rational and objective, because we have something that's more efficient and more objective than we are, doing a lot of our analysis. But again, more important, managing the impact of trading emotions. Again, all of these things are designed to help you in such a way where you can have a plan and, more importantly, enact that plan, actually do it, because you've got your trading psychology under control, you've got an objective methodology that you can use, and you've got technology that does some of it for you, which again helps you stick to your plan. So we've got 2 promotions to help you get started. So I know that there are loads of different places that people can learn to trade, and it can be a little bit overwhelming. If you're new to it, you might feel a bit bombarded with all of the different choices that you have. If you've been around trading for a long time, you might have been through various different ways of being educated. So I get it. Some people are unsure whether or not something like this works out for them, whether the methodology makes sense or not. That's why we do a free 14-day trial. So you can try us out for a couple of weeks, see if it makes sense, see if you like it. If it doesn't, then fine, cancel the subscription. But if it does, then you've had a couple of weeks to really know that it's something that works for you first. Now, we also do courses, live courses, where we go through how we apply methodology to different things, trade plans, backtesting, psychology, and you can register for any course at the moment and get an additional course for free. So thanks to YouCanTrade, we have that offer there. Now, the second course needs to be of equal or lesser value than the first course you pick. So if you go to the website, which is youcantrade.com/channels/predictive. You can have a look at what we do there and how you can put it together in such a way to make the best use of that offer. So a few more details about Tradictive. I'm not going to read this all to you. I'm just going to highlight the word multi, or you guys were saying states multi. So multi-asset, multi-style, multi-coaches, over 100 years of market experience. That's just Wayne and others as well. Multi-live sessions, multi-courses. The reason I'm highlighting that is to just make the point that, yes, we have an objective methodology with a flowchart. It's all nice and pretty. We know what we're doing. But like we said, there are differences in environments, differences in individual subjective traders that need to mold things slightly differently. They might trade different assets, different markets. They might trade different styles of trading. They might resonate with different people. They might have different times of day that they're about, which is why we have this varied approach to the way that we teach, so that it can fit with as many individual subjective trading plans as possible. So this is the way it works in terms of our schedule. So I'm just going to show you quickly here. So we have active days where we go through futures and options. That's Mondays, Wednesdays, and Fridays. We have less active days where we go through stocks and investing. Again, those sessions are at different times as well. In the mornings, we have a 15-minute overview to look at what we expect to happen in the markets coming up. In the afternoons, we have a review as to what did happen, what can we learn, what went as expected, what didn't, how can we move forwards. Over the weekend, we have reinforcement sessions where we're going through the methodology, different parts of that flowchart, expanding on it for those that need to get more of the concept and the theory. And again, very, very, very important psychology session with Reynaldo. He's basically your one-on-one, or maybe there's a couple of people in the room there, but he's your access to a trading psychology coach that can help you personally with your trading psychology. Now, this is a month in what we do. I'm showing you the month view as well as the weekly view, just to show you the courses that we do. So you'll see that the blue boxes are the same. This is all the same. The pre-market overview, the futures and option sessions, the after hours review, that's all the same. But you'll notice we have different colors here. These are the different courses that we do. So we do futures and stocks, which are both applying that methodology to those asset classes. We have backtesting your plan, building your trade plan. I do those, funnily enough. And then we have the trading psychology class as well. So you can go to the website to learn more about them, but for the upcoming 3 classes that we have, there's also a special coupon code here. I'll put those codes up at the end actually, so you guys can take a snapshot. But it's basically with Louise on 9/26. That's for the next futures class. That'll be at the end of September. with Becky on 9/26. That is the backtesting class. That will be in mid-September, or with Becky on 8/29, and that will be the trade plan class. That will be the end of August. So again, you've got those codes there to use. So gift for you guys. Again, we said the most important part of your trading methodology part of your trade plan is answering the question, should I be long, short, or do nothing? We use AutoClimate for that. And so our gift to you is the AutoClimate app. So again, it helps us figure out what we should be doing in answering that question. In order to get it, all you need to do is go to tradictive.com/aclimate, as in AutoClimate, aclimate, and just follow the instructions. It's pretty simple. You just click install for free. So follow the URL, follow the steps. It will auto install. So it'll take you through to the trading app store and TradeStation. It will auto install into your TradeStation, and we will send you the user guide as well. Of course, if you have any issues with it, if you have any struggles, if it doesn't download or you get confused or something, you can just email us. But it is a free tool there for you guys to use, which will hopefully help you to be much more objective when it comes to answering that first question. Do I buy? Do I sell? Do I do nothing? Okay, so where are we at on time? We have 10 minutes left. Brilliant. So these are the codes again. So we have the futures, trading plans, and backtesting. So again, just to read those for those that might not be able to see that if you're on a phone or something. With Louise on 9/26, that is a code to get 20% off on the futures class upcoming with Louise at the end of September. For the trading plans and backtesting, because they're with me, not with Louise, it's with Becky. And for the trading plans, it's with Becky on 8/29. That's a 20% off coupon code for my trade plan class. And for the backtesting class, it's with Becky on 9/26. So again, 20% off for the backtesting class. Again, you can go to the website to learn more about these courses or the way we do things or the methodology. But again, I just want to reinforce as well that the concepts that we've gone through this evening in terms of having structure, having a yes or no answer, having psychology as part of your trade plan, not being overcomplicated, not being oversimple, those apply universally. Whatever methodology you use, whatever flowchart you want to have, whatever you already trade, those concepts work the same. So hopefully you've picked up some things that might help you to look at your trade plans you already have, see where you might be able to improve them. For those that maybe don't have trade plans, you have a little bit more direction as to what you need to have in it and how you need to build it. And for those that maybe have trade plans that you're happy with, maybe you just picked up a little bit here or there just to reinforce some things. So hopefully that was helpful, guys. Again, to get the free AutoClimate app, you go to tradictive.com/aclimate. So you can get that gift. Again, it's free. And you can try us out for 14 days to learn more about how we do things as well. So I'm going to turn it over to you guys in terms of questions. I'm going to just look over here for any questions. So I'm just going to read the first one I see. Backtesting classes in TradeStation, correct? Yeah, TradeStation and TradingView. So again, we use different platforms, different brokers, or well, yeah, different platforms in order to do it on different asset classes and different styles as well. So if you're somebody that does intraday trading on futures, you might use TradingView to do your backtesting. If you're somebody that does swing trading on stocks or Forex, you might use TradeStation to do your backtesting. Again, we show it on 2 different platforms, again, to accommodate those different individual situations. Is your backtesting class platform specific? Hopefully that just answered that question as well. So that's on TradingView and on TradeStation. Futures class in Futures Plus app. I'm not sure what that means. Maybe rephrase that. I might be being stupid there on how I'm reading it, but futures class in Futures Plus app. Oh, does it mean including the apps that we use? If that's the question, then yes, the apps that we use are included on the classes. For a certain period of time, you get them so that you can practice with them. If you want to use the apps after that certain period of time, then it's up to you to subscribe if you want to use them. But the AutoClimate app is free. Futures class is options or just futures. The futures class is just futures. Stocks class is just stocks. Again, we're using the flowchart, we're using the methodology, we're applying it in slightly different way because we've changed a variable there by changing the asset class. But yeah, they are specific to those asset classes. As part of the channel where we do the sessions, that's where we're going to have the option sessions and investing sessions. And the reinforcement sessions that we do over the weekend as well, some of those are going to be options or investing specific as well. So if you're somebody that's more interested in options, at the moment we don't have an options class within the Tradictive channel, but we do have options live sessions that you can join. So you can watch us trade live in the markets using this methodology and other methodologies as well in options during the live sessions that we do as part of the channel, not as part of a course. Hopefully that makes sense. I have to go change a messy diaper. Thanks so much for this class. Have fun. Hope you enjoy that. Can we get the recording of the presentation? I'm pretty sure the recording comes out tomorrow. If someone can confirm that for me. I'm pretty sure it comes out tomorrow. You'll be able to watch it then. Newbie here, is backtesting and sim trading the same thing? Great question. So no, backtesting is taking a strategy and looking to the past and saying, if I had traded that from a year ago up until now, or 3 years ago up until now, or 6 months ago up until now, what would my results have been? Sim trading is trading on not real money from now into the future. So in order for me to collect 6 months worth of trading data and trading samples, I still have to go through 6 real months of real time in order to collect that data. If I backtest, because the data's already there, I can collect 6 months of data, 6 months of trading samples in maybe a matter of hours, maybe days, depending on how quickly you do that. So hopefully I've helped make that distinction there between what backtesting and sim testing is. Effectively, they do the same thing. They're allowing you to not risk real money in order to test a plan. The difference is the efficiency of time. Backtesting allows us to do that analysis and that data collection much quicker because we don't have to wait for real time to pass. So that's the difference there. Hopefully that makes sense. I can see Ruth. Hi Ruth. You were in the trade plan class, so we'll see you in the backtesting class there for, it's actually the backtesting class now is September 19th and 20th. I think I'm right on that. You can check on the website to double check that, but I believe it's the 19th and 20th. So we'll see you there. What determines a high probability trade? That is a very broad question. Many things will determine a high probability trade. Again, that's dependent on you and your methodology, what markets you use, what timeframes you use. For example, you could use the exact same methodology and on one time frame you have a certain probability rate, and on a different time frame you have a different probability rate. So there's so many factors that go into whether or not a trade has high probability. Again, that's why we want to use technology as much as we can that does a lot of that analysis for us and gives us this is high probability or this isn't, without us needing to go and analyze all of those things for ourselves to then come up with an answer to that question. Sorry, I can't be more specific on that, but hopefully you understand why. It's just because there's so many things that go into it. But yeah, effectively, we want to use technology to help answer that question as quickly and efficiently as we can. Okay, I know how to trade. I tried to join Tradictive. I kept getting an error message. Can you help me? Okay, that's something I think YouCanTrade should help you with. So the YouCanTrade panelists, if they're still on the session, might be able to look. If not, if you email us, Tradictive at youcantrade.com. I'll just put that up here. Tradictive at youcantrade.com. Email us and we will send it to the relevant people to get that sorted, or you can contact YouCanTrade directly, but email us on that and we'll be able to help you out for the person that said that. Okay, so we just had a confirmation the recording will be emailed to everybody, so great, you guys will get that. Question, the trading plan class based on stocks exclusively? No, trade plan class is relevant to absolutely every style and every market you want to trade. And that's because the concepts are the same, of having structure, of how we find that structure. If we're newer to trading and we're looking at it going, I don't know what I want to do. Do I want to intraday trade? What market should I trade? What time frame should I use? What methodology makes sense to me? How do I define my risk? How do I know what to expect? Those are all the things we go through in the trading plan class. So that applies to everything. And again, on backtesting, we show examples on futures and on Forex. But again, same applies to stocks. On options, obviously slightly more complicated there with methodologies you would use, which means your backtesting would be more complex in terms of collecting trades that fit that methodology. But again, concepts and the technology used and the tools we use, exactly the same. Okay, we've just got something there, a response from Tradictive supports to anyone getting any error messages. You've got info@youcantrade.com as well. Third time lucky, 26th, 27th. Okay, hopefully we'll see you soon, Ruth, in the class there. Great, cool. Just reading through them, trying to read through quickly so I can see questions. How does AutoUFOs work? Again, broad question. They find buy orders and sell orders in the market by looking at many things such as volume, structure of price, upticks, downticks. It basically analyzes multiple data sets in the market data that we have to show us where we have a likelihood of there being big stacks of buy orders that could push price up, or big stacks of sell orders that could push price down. Therefore, that's why we use the technology that can do all that analysis much quicker and more objectively and efficiently than we can to help identify where we buy and where we sell. That's what we use AutoUFOs for. Okay, brilliant. I think we've just hit the top of the hour there. So hopefully I've got to most of your questions. If I've missed any of you, which I'm sure I must have, you can email us in general at tradictive@youcantrade.com or me at bhayman@tradictive.com. Oh, let me just do that over here. So you've got that one. Sorry, bhayman@youcantrade.com or tradictive@youcantrade.com. So anyone that has questions that you want answering, just email us, me or us in general, at those emails, just in case I've missed you. Hopefully it's been helpful. And I will see you guys hopefully in classes coming up, sessions coming up, or the next webinar that I do. Happy trading. Yeah, have fun, guys, and see you soon, hopefully. Take care. Bye-bye.